G'day and welcome to the weekly VEMA Trader market scan. My name is Rhys and in today's video I'm going to be running you through my thoughts on Bitcoin. So what we'll do is we'll go and take a look at the trade that we set up last week and then we'll take a look at Bitcoin as it stands today and see if there's any trades that we like the look of. If there is, we'll set those trades up. So what we'll do is we'll head to VEMA Trader and we'll get started. Right, so this is the trade setup that we created last week and what we were looking for was a short from alpha. We're essentially expecting price to come up and then come down from there. Now we did see that happen, the price went up and then came back down. Unfortunately we got front run just very slightly, which always sucks to see, but it is part of the game. So we'll tag that because that way if we consistently see that we are getting front run, we can look at those tags, we can say, okay, I've been front run on, 20% of my trades, so what I need to start doing is using either a distance to activate or moving my trigger just slightly to get myself into those positions. So that trade has now hit expiry, which means that it has stopped monitoring. You can see that in the journal here. And that's ideal because if price was to get back up there now, I would be less confident. There is a bit of a range developing, but if we want to get into that trade again, I'll set that up when we take a look at Bitcoin, as it stands today, which we will go and do right now. Righto, so starting out on the weekly as we like to do, there's really not a whole lot to report. We had a doji for our last weekly candle. That is now 2 dojis in a row. So essentially all we're seeing on the weeklies is indecision. Kind of makes it hard to pick a direction from the weekly charts at the moment. Righto, so now we come down to the daily. And in fact, what I'll do is I will clear the left panel so that I've got a bit more room to work with. And the thing to note, in my opinion, is this ascending wedge. So an ascending wedge is typically a bearish pattern. And as I have alluded to often in recent weeks, I am pretty bearish on the market just because of the fact it is essentially a huge bear market. So to see a bearish pattern in a bear market, that's always a good sign that being bearish is not a bad idea. So I still think we're in this big sort of daily bear flag, right, that I've been drawing for a little while. And so when I see this wedge start to form, I start to think, okay, we are potentially going to head to the bottom of that bear flag. So I'm sort of thinking we might see something like this come up, test that zone, break the wedge, break that bottom trend line, and then head down to this sort of 21,500 level. Now it might happen in the other order, right? We might break, we might come up and retest, then we might go down. It might not happen at all. We could just break down, or we could just break up, and do something like that. But that is kind of what I think of as I wouldn't even say the most likely scenario, but the one that I want to trade if this happens, kind of thing. So that's kind of what I'm seeing on the daily. Now we did have that bearish divergence that I spoke about last week, maybe even, it must have been last week because it couldn't have happened before that. So that also kind of makes me think that we might be heading down, at least over the next couple of weeks. So yeah, when I say we could be heading down, right, when I draw like that. So that would indicate we're heading up over the next couple of days, but I'm sort of picturing something like that. So that's kind of what I'm seeing. Now, as I've spoken about for, you guys are probably sick of hearing it if you're watching these videos every week. I'm not writing off a return to 29,000. It just kind of makes sense on the weekly to have a retracement after so much downward price movement. You do kind of expect the market to move in waves. You can see it doing it here. Up, down, up, down, up, down, up, down, up, down. On the weekly, it is basically just been down, right? There really hasn't been any up. So, yeah, it wouldn't surprise me to see something like that. But there's no guarantees that the market moves in waves. It can go straight down, it can go straight up. Anyone who was around for 2017 or, I can't remember when the last bull run was, I think 2020, maybe 2021. I think it was 2020. But price just went parabolic, right? And basically just went straight up. No downward movement. So definitely could be the case that we just do continue to head down, but not writing off a case to the upside. And that's something you kind of want to do when you're trading. You never want to be like, it is guaranteed. Anytime you are 100% confident in a trade, you need to step away from the computer. Like you are on tilt. You should never be 100% confident in a trade. Unless there's some kind of like arb opportunity, but I wouldn't really call that a trade. It's kind of a different way of making money. Trading is a game of probabilities. You are never going to be right 100% of the time, and you should never, ever have 100% confidence in a trade. So that is why I have a case for up and a case for down. I just think the down is more likely at the moment based on everything that I am seeing. Okay, so down here on the 4 hour, we have a bit more to work with. So what we essentially saw happen across last week was a descending wedge that has now broken out broke here, retested here, confirmed there where it moved away. Sorry, that was a lot of little scribbles. Now, that kind of brings me to an important point, and this is horizontals versus patterns. I will often look, even though there's a pattern there is a descending wedge, which is a bullish pattern. You do want to, or I want to pay attention to horizontals around that pattern, because if I had gone long based on the break of this pattern, let's say here, or based on the confirmation of the retest here, I would be going long straight into resistance, right? That is a really solid EQ. It's been tested multiple times, held, a lot. You always want to be thinking, okay, where am I buying? Because buying just before resistance is a very risky move. Now, we could have broken it, and it would have worked out fantastically, but it just adds to the risk of that trade not going well, because there is resistance straight above your entry. So that is why I'm really, really big on horizontal levels. Speaking of horizontal levels, Bitcoin is essentially just channeling, right? Even though we swept out that low a little bit there, we're basically just in this range and have been for a bit over a week. So the break of this range is kind of what I'm looking for in a bit of a roundabout way. So because my high time frame bias is bearish, even though we've seen this ascending wedge, honestly, the fact that we didn't break resistance, that we kind of held there, adds to my bearish bias. And it all kind of gets me going, okay, I do think there's a good chance that if we get up here, this level may hold, right? So this supply zone, the 4-hour supply zone, which lines up with the daily supply zone that we're looking at before. There's also this daily EQ there. So there is a couple of reasons that I am pretty keen on a short if we do get up to that region. Now, you could also draw in a 4-hour EQ through there, and it's definitely a valid level. I just don't like drawing it because the chart starts to get messy. And I'm not going to use it for a trade, so I would rather just not have it there, but it's definitely something that I do want to consider. Now, what does make me a little bit nervous is because we're in this range, if we break this range and do head to the upside, there's a good chance that we do see a lot of buyers step in. So this is kind of a riskier trade, but it's a setup that I like the look of. It's with my high time frame bias. I'm going to set this trade up. The other setup that I'm looking for is our phase 1 strategy. So there is this demand zone. Now it's kind of a weak demand zone because we didn't break these highs. So, it didn't lead to a new market structure. But it's really the only... Actually, that kind of is in this trade's favour because we're looking for a short if this level breaks. So it's kind of the only structure until we get down to here. So I look at that and I go, okay, if we break this level, if we close below it, what's in the way for buyers to look at? And really there's only this 61.8. There's potentially a 4-hour EQ. If I do go back and really look for one, you can probably draw one in there. But nothing that I see that makes me go, okay, buyers are really likely to step in there until we get down to this 4-hour demand zone, which lines up with the daily demand zone. So I look at that and I go, okay, if we get a close below this zone, then I really want to be getting into a short. And that kind of helps me because like we were looking at on the daily, where I'm kind of thinking price might come up here and then come down. If we don't come up there first, if we do just break down, then I've still got an option to get into this trade, and catch that move down. So those are really the two trade setups that I'm looking at. I'll go and set those trades up and then I'll run you through those setups. Righto, so before I get into the setup of these trades, I'm actually going to show you guys something cool that our dev Dalla discovered recently. So big shout out to Dalla. He's a wizard at what he does, and this was a pretty cool discovery that I did promise him I would put into these Monday market scans. So what it is you can actually rename your triggers. So you can see I've named that one short from supply. Now it does still say alpha over here currently, but we will get to that in a second. Let's call this one break of demand. And then what I can do is if I refresh, so first thing I actually want to make sure that has saved. So you can see the tick in the cloud there, that has definitely saved. Then when I refresh, you will note that when the triggers appear over here, they're actually named what I renamed them as. So if you do want to do that, all you have to do is right click on the trigger and go to settings, and then you can just change what is typed into the text. You can also do it by hitting, when you've got the trigger selected, there's a settings button there. So either one of those will allow you to rename the trigger, and then that will actually all rename in VEMA from that point onwards. Okay, so starting with our break of demand, you can see that the trigger is now called break of demand rather than Bravo after our refresh. So that is pretty cool. Big shout out to Della. Now, in terms of stop loss placement, I have given it a little bit more room than I usually would on these trades just because that 4-hour EQ is there. So I thought I'll use that just as a bit more of a buffer. And I am targeting that daily demand zone about 21,300. In terms of the journal, we have tagged phase 1, 4-hour demand zone, and with my high time frame bias. Excuse me. So that is that trade. In terms of the short from supply, pretty standard, right? Live, short from supply, bounce. You will see me set up these trades time and time again, to my detriment lately, but in the long run, they have been quite successful for me. So we have a bearish daily bias in terms of tags, daily supply zone, 4-hour supply zone, daily EQ, and with my high time frame bias. Now, I did allude to an upcoming video, or a project I'm working on at least, that will be a video in the future. And that is, I am currently paper trading and testing a bunch of different ideas I've had about my trading or just different things using the tag system. So one that I'm currently doing is I've had an idea for probably a couple of years that I've just never gone and actually tested, that if I halved my stop losses on these sorts of trades, so put them sort of halfway through the zone instead, I would massively increase my profitability. And my theory behind that is I might get stopped out of, say, 10 to 15% more trades, but I'm literally doubling my risk to reward, right? You can see it's at a 10 to 1 here. If we have it back there, it's about a 5 to 1, right? So if I am losing 10% more trades, but I'm making twice as much on every trade that I win, I'm actually going to come out a long way ahead in the long run. So how I am testing that theory and collecting the data with VEMA is I am setting up paper trades, identical paper trades, right? So the same trade twice from, this short from supply trigger, essentially. But what I'm doing is on one, I'm using my standard, what I'm calling a full zone stop loss, because it is, using the full zone for my stop loss placement. Then I'm also setting up the exact same trade, and the only thing I'm changing is my stop loss placement. So let's put it, somewhere around there, get myself back to that 10 to 1. And then instead of full zone stop loss, I am tagging half zone stop loss. So my aim is, once I have collected a fair bit of data, I've had a lot of trades that enter off this system, I can go to the analyze screen and I can see, okay, my win rate for one is 45%. Let's say the full zone stop loss, 45% win rate, but my risk to reward is, 3 to 1 on average. With the other one, my win rate drops down to 35%, but my risk to reward is 6 to 1 on average. And that might not be the case. It could turn out that the win rate is a lot smaller on the half zone stop losses to the point that it's not worth using them. But it's just a great way of using VEMA to collect data. So that is something that I'm currently doing, and it might be a good idea for you guys to try out. If you've got different ideas about trading, it is a pretty cool way to do it because, backtesting is really important, but also a little bit boring. And I'm the first to admit that. Using VEMA to forward trade is really handy for a bunch of different reasons. One, it kind of just gets you used to the market. It gets you setting up trades, it gets you doing these things. And especially, one of the things I really like about VEMA is the only difference from live to paper is this button. And then, obviously having to select the exchange account. But because it's always so similar, psychologically, it makes things a lot easier for you when you do switch to live trading from paper trading, because it just looks all the same. So that is another big plus. Anyway, that's it for me. So those are the two trades that I'm setting up. Hopefully we have some success this week. Hopefully you guys are having a ripper week. Hopefully your trading is going really well. Have a great day. Happy trading, and I'll talk to you very soon.